Hello guys and welcome to today's market recap. Another day not taking any trades. Why? Hold on. Just because there was no setup and I was actually at school, I was not able to trade, and lucky for me I had school and I couldn't trade. But because if I could have trade, I could have been taking a loss. You may ask why. I will cover that up later. So without further ado, don't forget to smash up that like button and to hit that subscribe button. Thank you guys once again for hitting 190 subscribers. Now the target is very clear. It is 200 legends, and by when I reach 200 subscribers by the end of May, I'm going to do a strategy reveal, a video. I'm going to share with you my strategy step by fucking step, from the beginning of the day to the end of the day. What is my strategy? And I will show you some examples of my backtesting and basically the results of the strategy overall. So without further ado, let's get started to today's video. So as I told you, I had a bearish bias today. All right, we retraced back into this. Hold on. We broke structure to the downside right here yesterday, and today we actually took out the previous daily highs and we retraced back into this bearish daily fair value gap and this inverse fair value gap. That what does that called? The BPR. You may not have been I think most of you guys know how to trade properly, so you might know what a BPR is, so don't ask me dumb questions please. So with that, moving on to the 4-hour. Hold on, I'm speaking to this candle. So we moved out at London session, we moved higher, we took out all of this buy side liquidity, we filled up this order block, and then what I was interested in, scaling down to the lower time frame, which is the hourly. I wanted to see a sweep of liquidity which was present at that time. We took out all of those buy side liquidity, we filled up some sort of higher time frame confluences like the order block, for example. And then what I wanted to see is a 15-minute break of structure or market structure shift, which has happened exactly right here. We also created this fair value gap, but then price reversed from this fair value gap, got us here at this exactly equilibrium zone. Hold on, let's get on to the 15 minutes. I think, let me remember where it was. This was actually on GJ, so sorry for that. So we had this also the hourly fair value gap, all right, now it's clear. We retraced back into this breaker block, into this hourly fair value gap, and then I scaled down to the lower time frame, which is the 5-minute time frame. And as you see right here, I drew this line to basically take a screenshot and tell you what is my thoughts on this trade. So by that time, I wanted to see an inverse fair value gap, which has happened, which is the invalidation of the bullish order flow on the lower time frame. But my idea was wrong, because I should have waiting for this fair value gap to get inversed, not this one. And that is a thing that I need to put in my mind from now going further. So by that time, I was in school, but when I got back home, I analyzed the chart and I saw the opportunity that I was about to take. So this trade, if I took this trade, this could have been a losing trade, and I didn't took it, luckily for me, because right when we inverse this fair value gap, this 5-minute fair value gap, I think from this place to this place, so we inverse that fair value gap, we got this break of structure with this candle. I could have entered right here. My take profit will be, hold on, my take profit will be at those Asia lows. My stop loss will be above this order block, giving me a 1 to 2 risk to reward. and this could have been a losing trade, and luckily for me I did avoid this loss. Moving on to USD GPY now. Exactly the same fucking thing. So let's start with the daily again. I already told you my thought process on the trade. So on the daily, yesterday we inversed this bullish fair value gap on the daily, and now we did see the retracement back into this inverse fair value gap on the daily time frame, and then scaling down to the 1 hour. At London session, at the open of London session, we moved higher. We took out all of those buy side liquidity, the Asian session highs, and we filled up this hourly fair value gap. And also, it's a 4-hour fair value gap. So we have a sweep of liquidity. A 4-hour bearish fair value gap got filled. A 1-hour fair value gap got filled as well. What is my idea next? Is a 15-minute inversion of the invalidation of the current order flow and turn it into another the inverse order flow. So by that time we reversed right here, and we didn't inverse this fair value gap. So I waited, I kept waiting. Price did retrace back right here, and by that time I closed my laptop because I had school, and during that time price really came down. We broke structure right here, and then we did the inverse or the inversion of this fair value gap, and we retraced higher back into this fair value gap. And by that time what I should have been doing is a waiting for retracement back into the CISD. It's right here. CISD, where is it? Right here. Retracing back into the CISD equilibrium zone, which was present, and after the retracement I will just wait for a 1 minute break of structure to maintain like the bearish order flow. So right here we just did the market structure shift. Where is it? All right, market structure shift, reverse into this gap, boom. Hold on, enter up this downfall candle. Stops will be above those 15-minute highs, I guess. Those 15-minute, yeah, those 15-minute highs. The take profit is very obvious, those sell side liquidity. I did not want to hold to those Asian session lows because the trade, I felt that it's a little bit too risky. But then I did not took this trade. It was a 1 to 4 risk reward, but I did avoid taking this loss. I will definitely learn from my mistakes of today, because those two trades could have been losing trades, and I did not cop any one of them. So, and actually I was a little bit too careful because, as I told you, we have, let me show you really quick so you don't get bored. We have today the federal funds rate decision and the FOMC statement, and Jerome Powell is going to speak literally the next 1.5 hours, I guess, or not, the next 30 minutes. The next 30 minutes will be 7 p.m. I will be definitely watching that. If you have any interest in trading forex, of course you should have been watching those events, because not only the not only the technical analysis are very, or not only the technical analysis are required in your trading, but also you have to look for the fundamental analysis, because they are very important as well. So this is the end of the video. I hope you guys enjoyed. I'll be very open to see the federal funds rate decision, because I really wanted to lower the rates so our crypto bags can pump. By the way, Bitcoin now is at $96,000. I'll update you guys tomorrow what happened and exactly what is the final decision of the Federal Reserve. So without further ado, or with that being said, thank you guys for watching. Thanks for tuning in this video. I hope you guys benefit from this video. Make sure you guys like the video and subscribe, and peace out. I'll see you in the next one. Peace.